Hi guys, James here. Right, let's go look at some charts and get some money. Let's go to the money now. Gold, here we have gold chart here, and you can see the big down move that we've had yesterday from 1219 area down to 1200, which I always say is very important level. 1200. I was long here, as you can see here, when the markets, the indices, were going negative and gold was going up as we had risk on. Then the market went positive and we went from risk off, to risk on. And obviously when it's risk on, the gold goes down. And this is what happened. So I was long and was a buyer around about here. First we went into profit here, as you can see, and then we got stopped out for about a 4-point loss here. Then round about 1210, just above 1210, when it broke this area here, we went short from here just above 1210. I've just taken my profit down here at 1202 this morning when the European markets opened. So that was a nice little move. So we lost a few points there on that false up move there. But then as the US market started to push up, obviously, like I said, it becomes from risk off, it goes to risk on. So when the markets are going up, it's risk on. So we had this move down here. So we lost 4 points here, but then we made up for it with this move that finalized this morning down here at 1202. So I took profit here, and currently I'm not doing anything at the moment. But the key level for gold is 1200. This is a very significant level psychologically and for a lot of things. And we've got to watch this. We've got to watch risk on and risk off. Now if we close the gold, let's go out of the gold and let's go and look at the dollar. So we go to dollar index. Now dollar index has had this big up move to 104. It topped out just below 104. And now with such a big move to overbought, you can see here on the stochastics, it was overbought. Naturally, we've had a pullback here to 100. Now we're currently sitting at 100 here. This is very, very important key level. It's exactly the same as 1200 for gold. Now, if the US dollar can hold the 100 level here, then gold is likely going to go lower because the dollar is going to push higher, likely to 108 dollar index, and this will push gold below 1200. So what we're watching is 100 on the dollar index and 1200 on gold, and they have an opposite correlation to one another. So when the dollar is up, gold is down. Not always, but certainly at the moment with such a strong dollar, depending on geopolitical things that are going on in the world. But that's very important. And also, I know that some of you are looking at NUGT and the other gold miners ETFs, Dust. They will have a very high correlation to gold, so I'm not going through them today because whatever happens to gold will happen to Dust or NUGT, the ETF, so I won't go through them, but I hope that helps. Something else interesting, the S&P is at 2286 right now. So we're pretty near the highs, all-time highs. If we look at Wall Street here, the Dow Jones index. This is a daily chart. You can see we've been going sideways, 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 while we've been waiting for Trump and what he's going to do. And we're just starting to push higher, nearly 20,000 here. Now, if this 20,000 breaks, this is just like 100 for the dollar index, 1200 for gold. 20,000 is a very big psychological level for retail traders. It's not so important in the big scheme of things, but 20,000 can be a way that we can make some money. If you're trading the futures, we're very near. Right now, we're 19,974. Now, if this runs up to 20,000 today and kisses it on the cheek and it comes back down, you can short these futures from 20,000 with a very limited risk reward. So you've got a very small stop. What I'm saying is, if it fails, maybe Trump will do something bad today. I don't know, I hope not. But if it runs up to 20,000, turns around, you've got a very small risk for a potentially massive profit. Also, if we can get through there, through 20,000, and we can hold through 20,000 today, and we keep above it, you can put your stop at 20,000, and you'll have a very small risk compared to your reward. Now, being a successful trader is all about having an edge, and any successful trader who makes money has an edge. To have an edge, you must put things in your favor. One of these things is the risk reward of the trade. If you have a small loss comparative to your potential profit, then this is going to put you ahead, hands down. No doubt about it. So this 20,000 level, watch this. If it breaks, then you could go long and buy. If it runs up to it and fails, then you can short it for a very small stop, a very small risk. So that's the Dow Jones. So I hope that's been helpful. More tomorrow. Bye for now.